Assalamu alaikum and welcome to today's short video on the recent. It's basically based upon the overview of the Pakistan's economy based upon the release of Pakistan Economic Survey 25-26 last night. And I thought that I must, make a short summary kind of a video in which we can, look at the major figures to discuss how and why Pakistan is not achieving its target if it is, and what we can do and what is worrying and what is generally new. The source of all figures in this video will be from Pakistan Economic Survey 25-26, and some of the figures are taken from the IMF World Economic Outlook, but majority of the figures will obviously, be from the Pakistan Economic Survey. So I believe let's continue and let's see what is in the survey for us. Okay, so in 2025, basically this slide shows you that the economy has held up better than feared because the growth rate came in at 3.4%, which is a hair above in 2024. Trade has also expanded with a strong of 5.1%. But things turned more difficult in early 2026. Particularly, the conflict in Middle East has disrupted energy supply routes, which has added uncertainty, and we can see, its impact recorded in the Pakistan Economic Survey as well. So, because of the Middle East crisis, the IMF now projects global growth to slow down to 3.1% in 2026 and the global growth rate to fall sharply to 2.8%. And inflation was also expected to tick back up to around 4.4%. So the advanced economies are a mixed picture. If you talk about the United States, it's actually doing better. But thanks to its, you can say, fiscal spendings and technology, while Europe and Asia have faced the headwinds. So now let's talk about Pakistan. What happened in Pakistan? A Pakistan economy, as you can see, has picked up pace in the fiscal year 2026, and it has shown an impressive growth of 3.7%, which was if we can like compare it to the year before, it was around 3.18%. So the GDP in you can say in the dollar terms reached around $452 billion. The per capita income rose from 1.75 one to around $1,901. Now, this is also very interesting that, what does it mean? It means that around, you can say 40 to 43, you can say around 45,000 is the monthly per capita income in rupees for Pakistani people. And now you can imagine that if somebody is earning less than, around 45,000 per per month, which many people are in Pakistan. So they are earning below the per capita income. The fiscal story was particularly strong for Pakistan because as predicted by the Pakistan Economic Survey, the deficit has narrowed dramatically from 2.6% of GDP to just 0.7%, particularly in the first 9 months. The exchange rate has remained remarkably stable at around 281 rupees per dollar. And the one concern is obviously inflation, which has averaged around 6.2% for the year, which is quite higher for the last year's 4.7%. And it has spiked to around 10.9% in the recent April 2026, particularly due to the oil prices increases as a result of the Middle East crisis. So Now, this basically shows that all major sectors has contributed to growth this year. Agriculture grew by 2.89%, which is impressive given, the 2025 floods, because we were actually expecting that, because of the floods, the agriculture growth would be compromised, but we see that it has grown to 2.89%. Now, this is driven by the strong sugarcane, wheat, and rice harvest, particularly. If you talk about the livestock, as you can see in the graph, it was a standout at 3.75%. Industry also grew at 3.51% overall, but the large scale manufacturing was star performer at 6.11 percent. So without of you can say that 16 out of 22 subsectors in the growth you can say growth territory. So then let's talk about services sector, because services is a very important contributor towards GDP. It makes around 58% of the economy, and it has expanded to 4.9%. So the fastest growing subsector was IT and communication, which was around 7.52%. And it does reflect that Pakistan has pushed itself into the digital economy, and it's bringing results. So even the mining sector has returned to a positive growth for the first time since 2021 in this economic survey. So this slide basically covers the six most concerning developments. The first is obviously the inflation, which has spiked dangerously from 7.3% in the March to 10.9% in just 1 month in April 2026, because of the Middle East oil disruptions, which was much predicted as well. Second is the exports actually fell around 8%, and the trade deficit has widened from 22.7 billion to $27.9 billion. And third is the energy remained a major structural vulnerability. The country has spent around $8.9 billion importing petroleum, and this is also concerning. A fourth is the climate damage, which is recurring back for Pakistan. The 2025 floods alone, costed around 822 billion rupees. Fifth concern is regarding the poverty rates, which has, rose to 28.9%, and unemployment is also, increasing. So, which is, nearly 6 million people are without work. Last but not the least, concern is about the total public debt stock, which is around at 83 trillion rupees and $92 billion in external debt, which has leave little room for error. So debt is a huge issue, because our debt stock keeps piling up, and our debt has been unsustainable, as I have discussed quite a lot of time before. And referring to my co-authored book with Professor Dr. Aslam Chaudhary, we also did analysis of different years, and we found that hardly except few years, Pakistan's debt to GDP ratio has been unsustainable for most of the years. And why it has been unsustainable, what were the policies that went wrong, this is another debate. But debt remains a major concern. When your 80% of GDP is washed away in debt servicing, then it becomes a serious concern to worry about. So this slide basically talks about and what is new for Pakistan. What are the milestones and what are the reforms, and what we are expecting, for this year. So now for we can talk about the new and positive developments in the Pakistan Economic Survey. Pakistan has launched 5G, which, according to the Pakistan Economic Survey, is a good step, because the spectrum auction in March 2026 has raised over $500 million, which is a major infrastructure milestone. The government has formally approved a national artificial intelligence policy in 2025, which is signaling a strategic shift towards a digital economy. The stock market had a strong run up as well, up to around 18.4%, and IMF program has remained on track with this permit of around $1.2 billion. The IT exports has grew around you can say nearly around 20%, and the freelancer exports has surged over 50%. On debt management, the introduction of zero coupon PIBs and Skook has helped extend the maturity profile of government debt, reducing the rollover risk. But again, how much these have contributed in reducing the debt to GDP ratio is a matter of concern, because that is not too much. But still, there is some relief. Social indicators are also improved in this economic survey. You see literacy is up, out of school children are down, from 38 to 28%. Then comes your life expectancy, which has also risen. Sharia compliant finance is also growing up rapidly, which is more than half of the BSX listed securities are now the Sharia compliant. So these are some of the good news. Now, summing up the main overview of Pakistan Economic Survey recently launched, Pakistan is on the path of recovery according to this survey, and the important point to discuss is that it is not yet out of the woods. The positive side is clear. GDP is accelerating. Fiscal discipline is real and measurable. The digital and the tech sector is growing fast, and the IMF program has also, provided, you can say, some credibility anchor. But the concerns are equally real, because inflation is vulnerable to oil shocks, exports are under pressure, and the trade deficit is also widening up. Poverty remains quite high, because as I just discussed, the per capita incomes are around or you can say that they're less than 2,000, so for the year, and that is quite low. The debt stock leaves limited fiscal space for shocks, and the overall verdict, if I want to give, is that the economy is slowly stabilizing, but it is not yet resilient in nature. Structural reforms in energy, exports, and social services will determine that whether fiscal year 2027 can build on these gains or not. So this is a short summary for you on the recent economic survey launched last night.